CYC.X. And why is it important? It's called the Morgan Stanley Cyclical Index. Cyclical, where big money goes to find yield and dividend yields and how they pour in here and how they'll buy. But when the economy changes, stuff like Caterpillar coming down to $85, a great short up there at about $112 or $113. CSX is in here. You got the Dow one, DOW in here. You got FedEx, FCX. You got lots of great stuff in here. Honeywell, Johnson & Controls. I mean, come on. There's some great stocks in here. Sears Holdings. Different ones are made up here, but here's the key. That Caterpillar, that Deere, and that FCX, and that FedEx, and that Johnson & Controls are some major components in here. And I can tell you right now that you came down. This is where that short was. And we said what a miserable ending it was going to be. It got down here and it finally got, look it, we're oversold on a weekly level. Okay, we're above the 200 week. The neckline over here where we had the weekly support, boy, did we have great rallies. And look at the top major resistance level of 2011. Kabingo! Now, when the economy does better, some of these are tied to worldwide emerging markets that they do extremely well. This FCX, hey, it does well. And it's going to get on sale. So there are some stocks that Deere at some point, based on our economy, but the supply channel, U.S. supply channel and international supply channel are things that we look at in Caterpillar. We look at that in this Deere. They're great gauges as to what they're doing around the world. That Johnson & Controls has a meaning too in certain sectors. I'm not going to go into all of that. What I am going to go into right now, I will go into it with my MMTs, but for the sake of time, we have to close above that trend line. We are in a bear trend. We have a declining 10-week, consecutive 4 weeks closing below it. Bear trends sell into bull rallies and bear trends. It's a bear trend. Bull rally upside moves are always selling into resistance. It's going to take a lot of technical damage that's done here in a shorter time period. It's all going to have to flatten out. Like over here, you got to have rising 10-week moving averages, rising the red line, the 20-week moving averages, rising the longer-term 50-week moving averages. This is all bull stuff over here. This is bear stuff over here. And trade management, bear trends within bull side rallies have trade management, meaning that you're always selling the bull until eventually one day they turn around, whenever that day may come. It's going to take a while, but it's very important to know where that cyclical index is and where those leadership names are. Bear market, short-term oversold, sell into resistance.